As you heard, we're talking about the amendments, the possible amendments to the budget that's been signed in. We know it's worth 4.6 trillion naira. So clearly, because of the volatility that we've been seeing in the oil price and the fact that the naira is still weakening against the dollar, it's creating quite a lot of concerns.
Yes, Eleni, thanks for having us. Yes, you are. I mean, you are right, and I think everyone's fears are a bit accurate. If we do look at it, as earlier mentioned, the price of oil, Nigeria being a monoproduct economy and actually receiving about 90% of its revenue from the sale of its oil. If the oil price goes in the negative southward direction, then the expectations for Nigeria as a country are somewhat well, should I say diminished, because I mean, if the country is not able to derive this income, then what's it going to use to fund its infrastructure projects and also stabilize or strengthen the local currency, which is the naira.
Well, Tokunbo, also looking at the equity markets, because we've seen quite a lot of pressure coming through and we keep seeing losses. It's clearly, it ties in quite nicely with the fact that we have been seeing a lot of political uncertainty, and of course the fact that everyone's still waiting to see where the revenues are going to come from for the budget. How do you think that's going to play out? Do you think that we could see confidence being eroded from the market perspective, purely because we have been seeing volatility in the currency, and also the fact that the budget is set to be amended by 40%?
Well, if they do end up, which is very likely, reviewing the budget downwards by the 40% that we're hearing, and also, I mean, if they do reduce the, if they do sort of review the exchange rate, that could affect the capital markets in the sense that now capital markets are all sort of driven by expectations. So if the country, if the expectations for the country's income profile is diminished, then foreign investors, for example, might look at it and say, okay, where is the country going to find this growth? Where is the country going to find, where's the country going to, develop in the macroeconomic sense, and how is the country going to, stabilize the naira? So yes, it would affect the capital markets from that perspective, because foreign investments might reduce, and also if we, depending on which areas in the budget that they actually trim down, we could see some sectors in the capital market having to sort of downgrade, their expected fortunes. If you look at the building materials and the construction sector, for instance, if they were, originally set to benefit a lot from the 2010 budget, because I mean it's an election year next year, and then there's going to be a lot of drive to put a lot of infrastructure in place. So, for instance, if they were to shave off the 20% we hear from capital expenditure, then that could see some contracts being postponed to the next year, or being cancelled outrightly, which could affect the profitability expectations of some countries, some companies, companies like the likes of Julius Berger, could see those companies sort of, the expectations of those companies sort of trimmed down. So yes, it could affect. Yes, please.
Tokunbo, looking at mutual funds, because I mean, we're talking about the uncertainty that when it comes to the capital markets, would mutual funds be a great way to invest in Nigeria's various asset classes if you want various exposure, depending on how conservative or risky you are?
I mean, when you look at it, because of, I mean, the way the market has performed in recent times, it's been driven by news, positive news, negative news. This quarter, we've seen news like the progress made on the AMC bill, driving up the markets. We've seen news like the results released by the banks driving down the markets. So things are, the market is, largely being driven by news at the moment. And for, the average investor who might not have the time or the knowledge to actually keep up, with the news and understand what the actual implication of, the news that, is being published. on his investments, you know, mutual funds, you know, do present a good alternative, you know, to basically speculation, especially for, you know, the retail investors or the, you know, institutional investors that, you know, have their primary business out of, you know, financial services, and also foreign investors as well that sort of don't have, you know, probably the expertise or the resources to follow the Nigerian markets closely. So, I mean, mutual funds, yes, they do present, you know, an alternative to direct equity investments under the current circumstances. And you do know that, or you may be aware that they do, you know, also offer various advantages like portfolio diversification, for instance, you know, for a retail investor, for instance, with, you know, as little as 50,000 naira, you can, you know, gain access to different sectors quoted on the Nigerian Stock Exchange, and even different companies within those sectors quoted. So, I mean, they do offer various advantages, you know, besides the portfolio diversification. There's also returns, you know, liquidity, you could get your money out within 5 days, and you do gain access to the professional expertise and time of the fund manager. So yes, to answer your question, mutual funds, I mean, do present a good alternative in these times.